is evolving into something very powerful and a little bit separate. So maybe we call it the round table. Let's see. You can let me know what you guys think. Mark Hyder, welcome. Hypers, first man on board today. So let's start this session today. Welcome everyone with a look at Tesla, our favorite stock, our stock that reflects the future of humanity better than most others, even though we have other favorites too, from Nvidia to Robinhood, even Coinbase, but MicroStrategy and many other things. By the way, Søren Basher joining me next week in a podcast on my channel too, actually, where we discuss very important things, as you will see. But today, let's look at Tesla. It was a bloodbath. It was an absolute bloodbath on Friday. I did not have a good day with Pioneer Alpha because, as you know, I believe we're going back to 490. I got a little greedy. I was very heavy in short puts out of the money and at the money at 440. So that tear Pioneer Alpha down. So we probably, I don't have the numbers in yet, but probably tomorrow or Tuesday, we probably had the worst week of the year after 2 of the best weeks of the year. That's the price you pay if you go all in and ride the lightning up. We had ridiculous gains, but Friday was a bad day, so we probably end up this last week as our negative alpha week of the year. So far, probably negative 3% or something under Tesla. But I will tell you the exact numbers very soon. Once we have completed the analysis, I was a little distracted. Why? I will show you later in this session. We have very exciting news. I was very distracted, so I couldn't update everything. There's manual checks when we report on Pioneer Alpha because this is institutional now, so we can't make any mistakes. And I was a little distracted this weekend because I was building together with the team something absolutely amazing for Pioneerlands, and I will present it to you in a beta version, probably available tomorrow with a little bit of luck, but you will see the preview. That is the topics. Jovan asked, what do you think about Google stock? We will get to this later. First, we have to talk about Tesla. It's a good question. We answer it later. For now, we look at Tesla and the total bloodbath. Of course, the Nasdaq was down 1.5% and Tesla was down 4.75%. So 1.75% more and then dropped more after hours. So based on beta movements with the market, it should have been down 3%, which would have been much nicer. But Tesla went down even more, probably because it ran up so much. So the bottom line here is Tesla for the week is down nearly nothing, but flat for the week because it ran up so much. But why is this all happening and what does it mean for next week? So the analysis here is crystal clear. This has nothing to do with Tesla and everything with the market. And we need to talk market to understand what happens next. When you look at this, 1.54%, and the drop happened in the very beginning, the Nasdaq got crushed. Not extremely crushed, but pretty severely crushed after the run-up. Still up a little bit for the week. After the China summit was over, it crashed. Why is that? And I have some theories that I want to take you guys on to look at and then draw some conclusions what happens next, because it is very decisive and very important for us as investors to understand, is this just a hiccup? Is this just a hiccup in a long run-up, right? Look at this crazy thing. Since end of March, since beginning of April, we are on a complete tear after a pretty bad or dull Q1. Is this just a little hiccup, a little breather that would be very, very much earned here because we ran up so much? Is this just nothing to see here? Are we going flat on Monday, a little bit down more and then continue the rally? Or has something changed in the greater setup of the market? The greater setup of the market, that's what we have to figure out. Nikki Boyfloy asks if you're getting stimulus checks. Maybe soon, which wouldn't be that great. So here is some thinking around that. So number one, we see that bond yields are very, very scary. 30-year US bonds are now close to the 5% threshold. Very disturbing. The 10-year is at 5.8% or something. Let's see where it is. This is very concerning. And so the bonds are on an absolute tear. And you also see this is not just the United States, it's also all the other countries. Look at this. This is not very relaxing. Here's the 10-year for the German Bund. Here's the US Treasury. So even German Bund, well, Germany is in total free fall, of course, with that government. They are absolutely destroying themselves fiscally and in every other respect, energy and migration too. But fiscally, complete self-suicide and destruction. You see that Germany was doing extremely well, had negative rates. But you see the pattern. The US also on a complete tear in a bad way. Up. Japan, maybe the most scary of all, because Japan, we all got used to very low yields. The yen carry trade, you heard all about it. People, fleeing Japan for higher yields, that pushing a lot of capital into the United States. Now we might see the reverse, which is a very structural risk to the market. UK, of course, these people are completely destroying themselves, of course, and France, I don't even know if that's still a country. I'm not sure about France. But look at the UK, complete self-destruction, Germany, very bad, and Japan, the most scary thing for the United States. And of course, the US itself. Problematic situation. And when we look at the yields, here is CNBC, what's the latest bonds? Look at this, boom, 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 4.59, 4.6%. This is also not great when you look at how the bond yields moved. So why is that? Look at this spike. That explains a lot what is happening here with the market. Look at this. 5-day, you saw it here, 514. 515 was Friday, so you saw this, and this is not a good chart. Look at this, and that, in my opinion, explains why the market is getting scared. So this is not just a breather. We have to understand it. These bond yield developments are very scary. Look, beginning of the week, we were at 4.46. Now we are at 4.6. So nearly 0.14 percentage points higher. That is very scary. In case you don't know how this works, bonds are a much bigger market than equities. It's the world's largest market. And when bond yields go up, bonds go down, right? Because you have to devalue the bond when it trades. So the fixed yield of a bond gets higher because you're buying at a lower principal. So people are selling bonds cheaper because no one wants them. They want them to get cheaper so they get higher yields. Why is that? Because of inflation. We had this inflation shock because of Iran, and everyone kind of knew that. That is the big topic of today from a macro perspective. Everyone knew that Iran had a problem, that the Strait of Hormuz is closed. Everyone knows all these things, but it's not really priced in that this keeps the way it is, and that is the big problem. Here, Nikki Boyfloy says in Canada, same problem. So we get to Tesla in a second, but we need to watch macro. So here, because that is the determining factor for my thesis that Tesla goes to 490 quickly. I always said it only goes to all-time highs back because it's in a very strong position. Tesla goes back to all-time highs. If the market keeps up what it is doing and Tesla has no other catalysts, if Tesla gets more catalysts, it goes up faster. If it doesn't have catalysts and the market keeps being bullish, it goes back to 490. But here's the thing. We see serious warning signals that this party might be coming to an end, at least short term, if this doesn't resolve. This is not a good number for the bonds. And that means money is getting pulled out of the stock market now. Because if you get very high yields in bonds, people sell stocks and move them into bonds because you get free money. You get high yields. here with US Treasuries. So the higher the US Treasuries go, the less money there is for stocks, because the more people put it into US Treasuries, because they get higher interest now. Why do they get higher interest? Because the inflation is going up because of oil. Okay, and we saw the CPI numbers. That is actually concerning for my thesis, because my thesis was hinging on the market being bullish. If this continues, we are now running into real risks that we are just not bullish anymore, and that would be the end of this whole fun. Now, of course, Tesla can always pull itself up by its own shoelaces if it pulls off something big, which there are multiple big things, but I rather have a bull run where I don't even need that and Tesla goes up. So let's look a little deeper here. So we have seen the oil prices moving up, right? This is another important chart. So we have seen in the middle of this whole crisis in April and February and in March and April, it was a total spike, right? The Brent July futures that look forward, they were not that nervous. They were all assuming the war is over quickly. The real prices go, of course, up, right? Because no one cares about the black thing, because the black thing is the actual oil price. No one cares about that. People care about the oil price in the future. But what you saw since, what is this, April 20th, is that that future price goes up. So the blue line is a reflection of what the market thinks actually will happen to oil in the future. And what's very important is that there is now real fear. There's real fear that we actually run into a problem with the Strait of Hormuz. And it's not super big fear. The assumption is still this is over soon and the Strait of Hormuz will open in time. But the clock on this thing is ticking, because if it doesn't open in time, we are hitting a problem. And so we need to observe that if we want to stay ahead of everything. So sorry, I have to do so much macro, but it's all about macro if you want to have some control over the Tesla stock direction. So here's the situation with the Strait of Hormuz. We can make a very strong argument that a negative inflection point, meaning a huge rise in oil prices on a sustained level, hitting then inflation and tearing down the stock market, inevitably, right, and putting pressure on the Fed to raise rates and all kinds of terrible things. If oil stays high, we are dead. Right now, we all assume oil is not staying high, but the futures start changing. And there is a certain thesis, that is a very strong thesis right now, that if the Strait of Hormuz does not open in May, or let's say at some point early June, we are hitting a negative inflection point that cannot be reversed easily. So as you know, the Strait of Hormuz is a choke point for global oil. Over 20% of all global oil goes through that strait, and Iran is blocking it, and now Trump decided to block it too, because why not? And let's see, can we click on this? Strait of Hormuz. Here's the Strait of Hormuz. And I mean, you all know this thing. Let's zoom in. Here, Oman. Here's UAE. Oops. Here is the United Arab Emirates. Here's Oman. There is Dubai, Ras Al Khaimah. Here's Iran. Here's the Strait of Hormuz. All the oil needs to go through this from Kuwait, from Qatar, from Bahrain, and that is the problem, right? And so this is blocked, as you all know. And the problem is that global oil markets started with a very healthy buffer, right? Probably near decade highs in early 2026. So the good news when the Iran war started was China, other people, United States had very high inventories, buffers, right? They could release their own oil and use their own oil. But the drawdowns throughout the war have been record-setting. 250 million barrels drawn in March and April alone, 4 million daily rate out of these big reserves, okay? The OECD commercial stocks were plummeting, right? And forecasts now highlight the May and June crunch. UBS says inventories could approach record lows, 7.6 billion barrels, by end of May if trends continue. JP Morgan says commercial inventories, especially OECD, approach operational stress levels by early June. So JP Morgan says early June, UBS says end of May, with an operational flow by end of June. So end of June is bad if this stays closed. Product inventories, gasoline, jet fuel could hit critically low level even sooner. Now, the EIA, as of mid-May, assumes closure through late May. Losses peak at 10.8 million per day, barrels per day in May. And Saudi Aramco analyst says buffer exhausts, risk of physical shortages. So long story short, we are now getting concerned again about Iran, this time not about any kind of war, but the blockade of the Strait of Hormuz. And if this happens, we are at risk of really driving up oil prices in a way that we cannot take back. And you see that, as I showed before, in these futures, the blue futures you have to watch. And the fact that these blue futures are now on the rise is very concerning because that's forward-looking futures of the oil price. So why is this all important? Because my thesis on Tesla was based on the assumption that the market stays bullish. If the market crashes, of course Tesla crashes. And if the market stays flat or goes down slightly, even without a crash, or has these, headwinds, we have a situation and when we are not clear what's going to happen. And this is exactly what I'm watching now. So that's the problem. That is the problem that I have with the whole Tesla situation. So what I'm doing, let's get to strategy and tactics. What I'm doing is I still have high exposure, a little reduced exposure, but still high. So if we drop more, I will get hurt. Pioneer Alpha gets hurt. If we drop to 410 or 400, God save us all if that happens. But on Monday, so if we see continued slide down, so either we open green and go up, everything is fine. I still will take it a little slower then because I don't trust the macro situation. If we slide down more, I don't know exactly where this stops. If the market has a little panic attack right now with these yields, because you have to understand, this is not just the stock market. You have seen the bonds, and then it becomes more scary because it's not just the stock market throwing a tantrum, then it becomes the stock market watching the other market, and the other market is, if that goes more up, we have a problem. So I am watching Monday. If we go down, I have to de-risk and take some losses. If we go up, I will probably ride the dragon a little more, but also slowly take it down a notch, the leverage. If we go down right away, I'm definitely at the limit. I have to pull the brakes. So that's what I always say. If you're in any case in options, short-term options, short puts or something, you need to be super disciplined. And if you lose money, start losing money because something is going wrong, you need to take the losses and bite the foul apple, or whatever you say, the sour apple. Do not hope. Hope kills. Okay. So that is the take on this. Mark says, or Mar Haider, we have countries leaving OPEC and South America outputting more oil as well. It will be resolved eventually, but it might take a while. I agree. I also would bet on this getting resolved, but the problem is that might take multiple weeks for the markets to realize and the real resolution starting to happen. So if you are dependent on very short-term trading, this is a risky situation. We could definitely get a little panic here. We could, also could not. So I would say my takeaway is we are in a new regime right now, in a new tactical regime, and we cannot be as bullish as we used to be for risk reasons. You can still be fully invested in Tesla and everything, but high leverage in this situation, dangerous. Whereas before I was all for high leverage. I am still highly leveraged, but I'm taking out leverage now. This is too risky for me short term. So what else do we have? We have some questions, and then we have one important piece of news that has to do with SpaceX. Very important. here. Greetings from Germany. We have D Boots from Ohio tuning in. Hi, D Boots. And we have Cypress Hill 2007 from Germany. Greetings to Germany. Do you think there might be a dead cat bounce on Monday? Well, that's the many thousands of dollar question for me. If we get a dead cat bounce, I hope so. It would allow me to de-risk a little more civilized, but I can take any move. Maybe people are selling bonds to buy things like Stretch and SATA, Stretch from Strategy and SATA from another company's drive. I don't think that happens at that scale. Do you think unsupervised FSD will drive car sales? I think oil price drives car sales. I mean, Tesla is on an absolute tear when it comes to substance. So this whole Iran situation is super good for Tesla on a substance level, but that doesn't affect the stock short term. That is something that we will probably see in sales in the next quarterly earnings. Michael Tyler's another YouTuber, and he's called out the situation with bond rates Thursday night. I had a little exposure Friday, but not so bad. Yeah, I know Michael Tyler's YouTube. Sometimes he has good points. But it's always hard to predict, right? I heard all these things. I was very focused on Tesla, so I lost a little track of macro, I have to admit. This is the price you pay when you're in the market with full investments. You have to be on top of it. And I admit I got sucked a little bit too deep into Tesla and lost track of macro last week. And that cost me very dearly. So you always have to be on top of it. So, hi from Holland, Sam. If Tesla and MicroStrategy go down with the market, then I have more time to expand my positions for lower prices. Exactly. You're totally right. If you're not tactically trading and reliant on weekly performance, then this is all gold. Because nothing changes in the big picture, or if anything changes, it's to the positive, especially with MicroStrategy and especially with Tesla. So let's go to, we have Monaco. Carmelo Baresi. Hi to Monaco. We have people from everywhere. Now, let's talk about something extremely exciting. Taylor Brown's diecast says, will Tesla go up because SpaceX IPO news? Well, here's an important thing talking about SpaceX. We are building a very sophisticated model right here of SpaceX at Pioneer Alpha. I'm hiring a bunch of additional analysts and we are making good progress. This is like very exhausting, all this hiring process, but we are making progress. We're digging deeper and slowly, the whole picture emerges of orbital AI, of all the crazy things that are happening. And the more I'm digging into SpaceX, especially with the questions, is SpaceX merger a bad deal for Tesla shareholders? You know, I covered this to some extent and presented my model. But when I look at this model, all these questions, is SpaceX a good investment? Will it go down after IPO? I think yes, it will. Is it bad for Tesla shareholders? I think likely in the first 12 months, it's going to be a drag on Tesla shares. But after that, it will be a huge boost for the merged entity compared to Tesla only. But it all hinges on one central question, okay? That is why this news is so important. One central question. And that central question is, will Starship be ready in 2027 for commercial flights? Now, when we model this, first of all, I need to emphasize that some people get this wrong. Okay, this is, as so many things in life and so many things in the future, this is actually not, it's a little different with FSD, but this here is not a black or white situation. It is not the question if Starship just works or not, because Starship already works. It's already proven to go to orbit. It's already proven to open the cargo base. It cannot reuse the actual Starship, only the boosters, and the boosters still have some issues, but only minute issues. But the Starship cannot be reused right now. They have problems with the heat tiles, so you have to dispose of Starship right now. And that's the kind of discussion we have to have now as shareholders, future shareholders, merged shareholders. We need to understand what exactly is going on. Not this pie in the sky stuff, that the fanboys just say it's amazing, we go to Mars. Like, bro, you're not going to Mars for now. And we can't even land. We can't even bring back Starship. And the fact that we will be able to bring back Starship is of no interest to me, because I need to understand when exactly are we able to bring it back. This year, next year, 2028, 2029, when? Because that will drop prices another 5x. But here's the interesting thing. Even if we assume we cannot reuse Starship, this already brings down the costs by roughly 4x, 3 to 4x. Even if you dispose of Starship, it's 3 to 4 times cheaper than Falcon Heavy, because this thing is so large and you can reuse the booster. So we have to understand we have guaranteed success here to some extent, and you have to think of it not whether it works or not, but on a cost curve. You know, the current version of Starship, what cost for kilogram to orbit does it represent? Version 3, assuming Starship cannot be used, what cost does it represent? Is it $1,000 per kilogram? Is it 600? Is it 500? Is it 400? What happens once Starship can be reused, let's say 5 times? And what happens if that reuse costs $5 million per reuse for the tiles or something, versus $1 million, versus $100,000? What is the effect? What happens if you can use it for $5 million per reuse and you can reuse the whole Starship 100 times versus 5 times? That's how you have to build the model. And then the more you do that, is the more you see, well, the absolute risk of this whole thing not working is very minute. It will absolutely work, it's guaranteed. But it is a long path from working to being really cheap. But also, working already means a massive drop in cost from day one. So that's how you have to model the whole thing out. And of course, there are certain inflection points where you need a certain breakthrough in terms of costs of kilogram to orbit to really unleash orbital AI at scale. And that is kind of the inflection point we are looking at, even though, again, that's not a single point, because if Google sees this and they have to pay more for a data center in space than on Earth, they're still going to buy it because they know the curve is dropping dramatically, right? So let's say it costs you twice as much to build a data center in space than on Earth. Let's say in 2027, you still are going to buy it because you know you have to learn how this works. And in 2028, it's already, even in 2029, it's cheaper, something like that, an assumed curve. Another thing I learned, and then I get to this point here, is that insurance, the risk of this thing blowing up, is actually a much bigger problem than you would think. The insurance cost is not just covering the cost of Starship when it explodes, but also, of course, the cargo. And if you have like 100,000 B200s, Blackwells in this thing, and it blows up, paying for a Starship that just blew up is the smallest of your concerns. You know, you have to pay for these GPUs. And that means it's not rocket science what I'm saying here to understand that, no pun intended, but you have to understand the reliability of this thing is the central piece of the equation. Reusability and even more reliability. Because every time this thing blows up, it changes the entire financial equation. You have to forward project then this whole risk. Like if you launch something, you have launch costs of, let's say, $90 million, and you transport $500 million worth of stuff up there. Let's just assume that. That all sounds great, but then comes insurance. Even if you don't buy insurance and just have to cover this Tesla, it doesn't matter, same thing. And what is this insurance, right? If this thing blows up every 10th time, you have to add 10% to the cost. If it blows up every 5th time, you have to add 20% to the cost. And not to the launch cost, but to the total cost. So if this thing costs you 600 million and you blow up every 5th time, you have to add $120 million in hard costs on top of the $90 million launch cost. So you understand. You understand. Launch cost is 90 million, but 120 million is insurance cost on top of it if you blow up every 5th time. So you see, this is not a marginal thing. If you insurance, imagine you buy flight insurance, you buy a ticket, a business class ticket to whatever, New York for $2,000, and you have to pay $2,200 on top of it required insurance. That would impact your decisions, okay? So why is this so important? Because on May 20th, that is very, very soon. That is in 3 days. On May 20th, we will see for the first time version 3 of Starship being launched on Wednesday. On Wednesday, 6:30 p.m. Eastern, or no, yes, 6:30 p.m. Eastern time, we will launch the Starship. That is 5:30 Central Time. No, is it 5:30? Yeah, it's 5:30. 5:30 Texas time. We will see that. So this is very, very important. That's actually the first version 3 flight. The first flight of our new V3 vehicle. So I'm very, very excited now, much more than I was ever before, because now I understand the stakes. This thing, if this thing works, whatever they want to test, and comes down, you know, as it's supposed to be, that has a major impact on the IPO price. Guten Morgen from Redwood City, California. Thank you, Guido. Guido Rost from Redwood City. I lived in Menlo Park for a while, so I know that very well. Your phrase, Street Cred Zero says, doesn't SpaceX self-insure for all Starlink launches? Yes, but I mean, the fact that you're self-insuring doesn't change the cost of insurance, right? You still have to pay for it if it blows up. So it's very important. The reliability is more important than the reusability. And then the reusability is number 2. And reusability, there are 2 pieces, the booster and the Starship. So this all adds up, right? Good morning, 3 a.m. from Kevin from Australia. I love to hear your Tesla price outlook for 2030 and 35. Well, that's a long time out. But I mentioned 4,000 is my price target for Tesla without SpaceX in 2030 right now. I'm also up quite a bit on my short puts. How did you do that? You mean they're probably longer term short puts, because I'm definitely not up on my short puts on Friday. Here, Smart AI Money says, I think after the test of the new Starship V3, we'll have a much better idea of what we're looking at. Absolutely. So this is very, very important. This is a very, very important date. Mark it down. It's in 3 days on Friday, on Wednesday. Maybe I cover that. I should cover that in a live stream, because I can. No, 6:30 ET. I can't. I have to do it the following day. So that is the situation. So long story short, SpaceX, very important. This thing we have to watch has a direct impact on IPO, has a direct impact on my projections. When this thing actually hits the inflection point, at least we have way more data then. Is this a giant multi-year problem to make this thing work, or are we basically done? These are the 2 extremes that could come out of that. That has a direct impact on the orbital AI timeline. Very important impact. And that orbital AI timeline is the decisive question for Tesla shareholders, for the merger, for the projected situation. And I shared this whole video. You probably have seen it, but I made this video that just shows on a very simple basis. I can go through this very quickly. What I expect Tesla's market cap to be and SpaceX market cap. So I expect Tesla to be 8 trillion in 2029. I don't know what that is in share price, but something like 3,000 or 2,500 or something. But I expect SpaceX to go public at 2.2 trillion roughly, and then drop, because SpaceX has a lot of air gaps, right? It cannot get the cash flow in fast enough, and then it goes down, very likely, because it's a little hyped at the IPO and people get a little more realistic, lower the PE. But then at some point, SpaceX will bring in the cash, will grow Starlink, of course, but more importantly, will start the orbital AI cash stream. And that is very important. And the question is, when will this happen? And that's a total function of Starship. absolutely a function of Starship, because you need Starship to make this work, to actually become competitive and much, much more attractive than terrestrial data centers. And the question is that happening 2027 or 28 or 29 or 2030? And right now, I bet that in 2027, it already starts happening. That is not what most people think. So I'm contrarian on that side. And that launch on Wednesday will tell me more if we are on track. Most people don't understand the orbital AI satellites are easy stuff. I couldn't do it, but I'm not Elon, I'm not the SpaceX team. For the SpaceX team, it's easy peasy, not even an issue. It is all about Starship, and it's all about how much dollars per kilogram to orbit. And there are certain inflection points around $200 per kilogram, down from currently 2,500, so 10x, a little over 10x cost reduction. And I had a video on this in November last year. I was the first person on Earth who did that. I outlined that at $200 per kilogram to orbit, we probably look at something like 60% reduced cost of operating a 1 gigawatt data center in space over 10 years. 60% cheaper. Can you even imagine that? All in, right? So here you see the merged entity and the growth rates, right? So basically Tesla would grow roughly 50% in 2027, 66% after that, and 60% after that. So that's CAGR. That's why, you know, if you do it right, Tesla could potentially make us all very wealthy. Whereas SpaceX, first of all, drops this year after IPO, negative performance in my opinion, then has 25%, much less than Tesla, but then goes to the moon. And the question when it goes to the moon is exactly the question that we have to figure out. Is it here? Is it here? Is that inflection point actually realistic, or is it pushed backwards? And here you see the merged entity where I explained, well, I believe if they would merge based on these numbers, Tesla shareholders would make 38% next year instead of 50%, but then would already make 80% instead of 66, and then would make 88% instead of 60. So it's a winner for Tesla shareholders. Starting by the end of 2028, we win, and then we keep winning. But we lose in 2027. That's the theory of my projection here. If Starship has a problem, all of this can shift, and Tesla becomes much more attractive as a standalone. And if Starship performs even faster than I think, then Tesla becomes even less attractive as a standalone. So that is exactly why Starship matters so much. Okay, I'm just warming you guys up to think as combined potential shareholders and people who have to make these decisions and vote. Here, Nat says we won't see 700 before 2028. I think we can easily see 700 in November this year if things go right. Of course, we can also not see it if things go wrong. But if we scale to 10,000 robo-taxis by end of the year, you can say goodbye to 700 because we're going to 1,000. So I would definitely not bet on Tesla not getting to 700 this year, and definitely not bet against it going there next year, not to speak of 2028. So that is the situation here. What else do we have? Questions? 900 shares of Tesla at 240 enough to retire in 2030. Ooh, 900 shares of Tesla at 240. Let's say 1,000 shares. I think so. It depends where you live. That might be enough to retire if things go right. Bought some sats for exporter to SpaceX. I have one or more short sell to open puts for every month until sometime in 2028. Oh, already? So you stacked it? That's crazy. Okay, so that's the situation here. This is super exciting this week. I want to see Starship, and of course we have to watch the freaking markets. I'm in a situation that I normally don't like. I always say you don't want to be in a situation where you sleep worse at night because you're concerned about the market open. I am a little concerned about the market open, so I violated my own rule. I'm a little bit too leveraged. I think I should be 20% less leveraged than I am. But it was in the heat of the moment. I already deleveraged a little bit on Friday, but I should have done a little bit more, even if it goes green. I don't care. When I say these things and assess my own performance, I don't care if I lose money or make money. And mistake is a mistake. I think I made a mistake that I am 20% too leveraged right now. If it goes up, I will look very smart, but it's not smart. It is inappropriate risk. And the reason why I'm inappropriately risked right now is because I was on Friday not getting the full picture. I only got it over the weekend about the macro situation. It is a little potentially concerning. So cautious with the leverage right now. Kevin asks, do you reckon Pioneer Alpha will be open to Australia anytime soon? You guys can go to Pioneer Alpha to check out the latest. But as you know, as Australians, here's Pioneer Alpha. You can see that beautiful page here. If you're qualified, it asks you for your qualification status if you click here. And as you see, region not yet available. If you click on, any of these others, right? So the problem with Australia is that right now we are a little thin on manpower, and you need good attorneys for all these things because this is it's a institutional bond. All these countries have it, and the problem with Australia is that you need some kind of local representation and all kinds of stuff to really be allowed to sell securities. So that's my problem. So Kevin, stay tuned. We are working on it. I get a lot of requests from Australia, and I would love to help the Aussies too. So let's see. Hotel Snob says it will go up. Yes, let's hope so. When I make mistakes, I always like when I get rewarded for mistakes, but mostly that's not the case. Okay, guys. So now let's get to the news. The news. Who of you is on Pioneerlands? Are you all members? Are you on pioneerlands.org? Because we are working on a very important revamp. Here, I will share this whole page. Let me do it like this, or maybe this format here is better. We are working on a revamp. What is this? On a revamp of Pioneerlands with a new segment. Look at this. I will share it now. Are you prepared? Look at this. We are going into the publishing business. We become an important publisher here, and we turn Pioneer News into a real news section. So we will rebrand our main topics from Pioneer Alpha. It stays the same. We go to Pioneer Wealth, where we discuss personal finance, tax and policy, taxes, capital gains taxes. So it's a little more political for each of our countries. And then Pioneer Politics, where we have family, society, education. And then we will have a new page, probably next week for sure. See, we have this. What is this roundtable this Thursday? Do we have a roundtable Thursday? No, that's wrong. So here you will see our Sunday roundtables. So it's basically the same as we have now, but much nicer design. We call it Pioneerlands Daily. It's a newspaper established 2026. This is still wrong, the number. And we will have a morning edition, afternoon edition. So we will have curated news, that is ET, Eastern Time, New York time. So we will have news twice a day updated. And of course, in our favorite topics, Tesla, AGI, LLM, OpenAI, Anthropic, and so on, robots, and so on. I think it should, we make it work when we launch it, but you will see all the cool filtered news. So we can actually see the news that matter to us. Here, SpaceX, you see Figure 1 news, Google with Marvell for new chips, right? This is important news. UK in-memory compute startup Fractal, by the way, super hot stuff is coming. So daily upside maps, NVIDIA's customer to competitor pipeline, Meta's 4 new chips. So this is cool stuff. So that's the power of a good AI editorial team. We can look at the entire Earth and then present the stuff to you and to me so we know the latest. And then all the apps that we all use and love are on the left side. So we still have the Academy, little redesigned Pioneer Academy, where you can ask the questions here. That's still a little ugly. We will have to update the colors. But here you have, as you are used to it, the questions. We will update the design a little bit more. We still have community, of course. That is what you're used to, our forum. We have the cities, the stock targets, the wealth app, and of course Draupnir, our favorite, where we have the whole secret AI technology here, where you can see, I can show you this right now, where you see, you have your own agents and can do magic things. But the news is that we have now a very well structured outlet, a news situation, and I hope you guys like that. Heater says, I live in the most stupid country for capital gains, Denmark. I should start a GoFundMe or something. Well, you should move to Sweden. That's just 10 minutes away with the, what is it called? Öresund talk. And then you are in the best country for capital gains, because Sweden is actually a secret tax haven that most people don't know about. And Denmark is the worst country in Europe for capital gains. It's a beautiful country, but not good for capital gains. Jensen deserves to be on covers as much as Elon. I agree that Jensen is the man. He is definitely important. Smart AI money, Jensen on the first cover. Well, it's like, this is updated all the time. This is not like a weekly cover. So when you check it out, when it's live, there's another cover. I'm not like checking every single cover. This is automated because this is like high news cycle. I'm looking at the meta level. We have our editors, which are AI agents. And there will be lots of Elon covers, but there will be lots of other people too. So, you know, this is not a monthly or weekly publication. It's twice a day, and these things are updated. So I'm sure we get a lot of Elon too. And by the way, if you have criticism, we are working on building in like a better mechanism for criticism, because we need criticism, because I don't even care. Like, I'm not offended. I want to learn from you guys what you want. And so we make it a learning algorithm, right? Because this is a super complicated operation in the back end, and it's all about curating the right news. And so I'm not manipulating individual articles. I'm seeing stuff, and then I'm updating the editorial guidelines and briefings for the agents. So if we see too much Jensen, not enough Elon, we definitely will tell the agents and skew it more towards Elon over time. Street Cred Zero says, Micron Technologies dropped a lot. I was attempting a straddle, but I pivoted into a swing trade and came out ahead on MU just from the rapid share appreciation. Yeah, we have to be cautious, like straddles and stuff. It's all getting, you know, this can get wild very quickly. So we have to be cautious. Jensen, California seems to want to become another Denmark in the future. Well, Denmark might have terrible taxes, but it's a beautiful and wonderful country. California is a shithole with high taxes. That is like the problem. So, you know, Denmark is one of these countries that might have high taxes, but they're actually doing intelligent things with it. And, you know, California is the worst of both worlds. Total corruption and high taxes. And then it looks like LA. This is very unfortunate. The problem with Sweden is that it's Sweden. That is true. But they have the ESK, my favorite thing. I'm very impressed. I did the research on all these countries. And Sweden has the investeringssparkonto, where you basically pay a wealth tax voluntarily. So you put all your shares into this government-controlled account, and then you pay wealth taxes, but low, 0.8% a year on your wealth. But in exchange of paying that little wealth tax, you are completely capital gains free, and different from a Roth account in the United States or like an IRA. There is no contribution limits. You can put in millions, hundreds of millions of euros and dollars if you want, and you're tax free. All you pay is your little wealth tax. And it's voluntary. It's extremely smart. The Swedes sometimes are very smart, not on migration, but on other things. People in Denmark are a lot more attractive too. Wow, now you guys are fully at it. Poor Swedes. But if you live in, well, you can't live in Malmö. That's actually horrible. But if you would live in Malmö, you're in Denmark in like 10 minutes. Yeah, but the Denmark account, I didn't even look into that. This is completely capped to death. The Norwegians have a similar account, but you're not allowed to have bonds, which of course for me is less interesting because it's all about getting the Pioneer bonds publicly traded into these accounts. So in Norway, you have a good deal similar to Sweden, but no bonds, only stocks allowed. Sweden allows anything that's publicly traded. And Denmark is some total like joke. It's like Finland. You can like contribute like some tiny amount per year. That is not helpful. So I hope you guys check out the new Pioneerlands daily. And of course, I understand the publishing business. We need to generate value for everyone, for us, for the pioneers. And the reason I really believe in it is because of myself. And I think, not because I'm so awesome, I believe in it because I am a user and I am annoyed by the media, not just because they're stupid and biased and liars, but also because they're irrelevant. I don't want like a stupid newspaper like the New York Crimes. That's Stephen Mark Ryan. He has the best, he calls them the New York Crimes. So the New York Crimes is, first of all, stupid. Second, infiltrated by the woke mind virus. But third, completely irrelevant. I want the news on the world filtered through the lens that actually makes sense. The most important things that are happening. What are the most important things? I need AGI news. I need job replacement updates. I need a little macro, and I need a lot of Tesla, a lot of Elon, a lot of SpaceX, a lot of Jensen. You know, I need news, global news filtered according to intelligent perspectives. I also need to have politics news filtered by what actually matters. Where is the transformation? What is actually happening to our countries? What are the trajectories that change the future? And what does it all mean for us? I also want to see what countries try to attack our money with taxes and all kinds of stuff, what policies are being developed. Nothing else really matters. We have a little family and education in there too, of course. But we are focused here on the news that are relevant for pioneers, for you guys and me, for investors who think about the future, who want to secure the future, who want to make sure we're not missing out on something, and we are spotting the trends early, and we have intelligent commentary. Now, I can't guarantee all these news are actually true and real because we have to, they're scraped from other news sites. But we will have opinion sections and stuff like that where we start to have my commentary and maybe other people's. That is a little better curated, but at least we get the relevant info here. That is here. This is interesting. Cal State faces July renewal of 17 million OpenAI ChatGPT Edu contract amid faculty-student pushback. See, Harvard FAS phases out ChatGPT, adopts Anthropic Claude as primary AI toolkit. These are all very important things because it goes into how education is being shaped by these people. And Columbia University is now rolling out Claude. See, isn't that interesting? German FBI crime statistics: Syrians 16 times, Afghans 14 times violent crime suspects. What a surprise. So yeah, we have that. Exactly what we need, also that news section, but please also make a daily breaking important note not to miss items so we can have a busy day or week. We can see in 5 or 10 minutes what is really important. Yes, Andy, very good point. Of course, that's not easy. It's also about quality. If you do this, we also have to make sure it's good. But that's a good point. So this is more like if you have a little time, if you have a 30 minutes time, you want to browse everything, but maybe we make some breaking, like some daily briefing or something. And I think it's all about like getting your ideas, making it happen. In the beginning, it will be not so good, each of these pieces, and then over time we fine tune it. So what I'm thinking about is also how we give like feedback in here. So, because this goes right into the editorial group, which is our AI agents, plus some humans. And it's all about getting the feedback, like, is this good, is it bad? And really think like fine tuning it. So you guys can help you. Intelligent real news. Well, as I said, this is all iterative. So I think we made already tremendous progress. This is good stuff. But there will be issues, right? So we need to learn constantly and refine. For anyone to say California is shitty, whole is supremely ignorant. You think LA is all of California? Well, sorry about that. I just know LA. I also know the Bay Area. Like San Francisco is an extreme hyper joke. And LA is bad. That's what it is. And now the Palisades are burned like down. This is horrible. This is, like, it's LA is probably the city in the world that has the most beautiful setting. Like, if they wouldn't be so stupid, this would be the most beautiful city in the world. It has a perfect setup. But what they're doing politically is insane. Even though this new guy is like interesting, let's see if he can win. Tom Nash has very good macro world news analyses, says Street Cred Zero. I have to look into that. I just know his basic. You mean on YouTube or on X? I have to look into that. And it would be also nice to get these kinds of people into the news as news sources. To have Tom Nash or whoever also pulled into that. So we are working on this. This is all to be improved. So there you have it. That is the secret news that's coming. Pioneer Alpha. Does this work yet? Oh no, this is broken. California is beautiful. The politics are ugly. That is true. An Aussie co-worker of mine used to say of Sydney, it's like Los Angeles, but for smart people. I haven't been to Sydney, but my brother has been there for like many times, and he loves it. He loves it. He's a big Aussie fan. Okay, guys, I think that's it for today. These were the secret news. You are ahead of everyone because you see what we're doing here. I hope Tesla outlook. Let's see what happens next week. I am not happy with Friday. That definitely was a big hit for my completely outstanding performance of the previous 10 days. But now I have a big hit. So it's a little mitigated my success, but we will continue. And that is, the market punishes you at the millisecond where you're not paying attention enough. And I got distracted by Tesla and forgot to watch the macro situation. And then it hit us. But we're back in the saddle. FST 14.33 is out. I saw that. Tesla keeps being positive, crossing fingers for next week. I saw also, was in Mars Catalog, extremely positive review of 14.33. There is no doubt that this FSD 14.3 release was a huge deal because they revamped everything. I think the iteration speed will be much higher now. I mean, I'm strategically very bullish on this whole thing. I just know that macro plays a big role. So that's why our priority short term is always macro because that drags Tesla up or down. Watch Starship, and yes, I'm very bullish on FSD. I think people underestimate what's going to happen. Tobias Johansson, thank you. Appreciate your work. Thanks for tuning in. Mark Cave too, thank you. And see you very soon. Be cautious out there with the macro insanity. Watch the bond yields. Okay, guys, see you very soon. This will be out probably tomorrow with a little bit of luck. Until then.